All right. All right. So real estate of the week. Pull up the ATR again, and we're looking for a swing trade. So the only way we can trade a swing trade is have currencies by Friday, and it's already Tuesday, so we only got 3 days. So when we were on Monday, we have a goal of 500. So I think since we only got 3 days, we'll go to 400. Anything that do 400 would be okay. And so that means you got to have currencies that can do 100 pips or more. Actually, quite a bit more to get. As they only got 3 days left. So the only one that's got a big enough currency to do that is the pound New Zealand. But we'll take pound yen. These are the three biggest ones: pound yen, Swiss yen, and pound New Zealand. All right. So let me make a little note of that. Pound New Zealand, pound yen, and wait a minute, yeah, and pound yen, Swiss yen. Okay, there we go. All right. So now we'll go over here to the pound yen, start over here. All right. So pound yen's going up. Let's see where we might have a top up here, if we even do. Well, all right. So we're in extreme. So do we want to trade a real estate of the week trade in the extreme area? Do we want to do that? That's a question. No, we don't want to do that. All right. So it takes itself out. All right. So pound yen says, no, you don't want to do that. All right. How about Swiss yen? No, we're in extreme here. Do we really want to trade up in this area, in an extreme area? No, we don't. All right. So that takes that one out. And then we got pound New Zealand. All right. So hopefully there's something on pound New Zealand, because otherwise we're done. All right. Pound New Zealand, we're going down. All right. So let's see how far we got to go. All right. Well, we got a little ways here, but I don't know if it's very far. Let's go see. So you pull up your calculator, and we're currently at 2306, 23066, and we're going to subtract 22740 equals 326 pips. Not very big, but we're looking for about 400. It's the only thing we got, so let's take a look at it. Maybe we might just do it. It's going to be a little short one, but that's all right. All right, so I know I got fibs on here, but I probably ought to move this one up to this top right here, and that tightens this up a little bit. They know them. See how they know them? What you're looking for is, do you know it? Do you know it? Do you know it? Do you know it? Yeah, we know it. Okay, then you know this and you know this. All right. So today we need a pullback. All right. So if we get a pullback up in here, then you'll put an entry order here, an entry order here, and an entry order here. Now you got lots of places in here you can add positions. So let's say it comes down like this, comes through, bounces, comes down like that, and then bounces back up. All right, so you're in, and you can take a trade here, and when you make the turn here, you can take a trade here and leave this one in, and you might get 5-6 positions onto the downside. All right, but you start off with 3. All right, now don't put this one in below 2300 yet. All right, because this could pop down there, hit it with a wick, and then pull back up. So you don't want that to happen. But this one right here and this one right here, all right, these two right here, when do they go in? K will tell us. Now. You put them in now. There's only 2 of them. Well, yeah, but what if it doesn't go down there? Then it will never execute your trade. So you don't have to worry about it. All right. If it does, however, it is going to execute your trade. Do you want to be in? Yeah, I want to be in. Then you put the trade in. See? So those 2 go in, and any pullbacks become ones also. All right. Mark, we don't care about what it's doing on a 10-minute chart on a real estate of the week trade. We're looking for only the big picture. Only the big picture. Okay. So it doesn't matter what it's doing on a 10-minute chart, and most of the time it doesn't matter on that either. Like 95% of the time, it doesn't matter what it's doing on that. It matters what it's doing on a 60. All right. All right. Now, you can see also that this angle is unsustainable. All right. That is an unsustainable move. Now, this one was sustainable. See the difference in angle? That's why they could keep this one going. This one, they can't this steep. So they're going to have a pullback somewhere in here. I don't know where, but somewhere they're going to have to pull it back to get this so they can get this kind of angle going like that. See? So remember, angle's very important in the Forex or in all trading, but especially in the Forex because you got high volume. You got lots and lots and lots of transactions. So we do not have any of that yet. None of that is here. So what it tells you is, okay, maybe the pullback will come here, which I hope it does, because if it does, it sets the top and the angle to the downside. And there, the average retail trader's going, yeah, but where's the trade today, man? Where's the trade today? Are you going to trade it now? That's what they do. They're absolute idiots, absolute trading idiots. All right? The market doesn't move that way. It does not move so that you can go grab 10, 12 pips. But because it moves, you can grab 10, 12 pips, and that's why traders do it. All right? But that's stupid trading. All right, so we know, number one, we got to expect a pullback, a significant one, in order to get an angle. All right? So, it's tough. And once we get that, we'll be able to do it. Now, we could start with a temporary one right here, as long as we know that it's temporary. All right. And your job as a trader is to know that this may or may not be it. So I'm going to go along here like this and over to here. All right. Now, so I ignored this, but I took this top, this bottom, this top, this top, this top, this top, this top. That may be it. I don't know. I don't know. So if you wanted to put a little note on here, just put a note that says, temporary channel, so you don't forget. All right, put it up here, temporary channel. All right, so you're not married to it, you're just dating this thing for a while and see if it does that. So what would really be sweet is if it came up here and did it like an A and a B and a C up to here. That support is resistance here with a channel here. That would be nice. Then you got this trade, then you got this trade, and they could go all the way down. All right. Now, what wave are we in? We're in a 1, we're in a 2, we're in a 3 right here. So remember, all right, 3 typically equals 5, right? So if it pulled back here, would they get the same? Would they get a 5 wave down there that's roughly the same size? Yes or no? That's a question. Yes, thank you. All right. So you can already see the structure. What makes the most sense from a big boy, you got to think like a big boy. Don't think like a retail trader. From the big boy perspective, this is the place they should put the ABC in, so that they get this size and the 5th wave are virtually the same. That means that everybody will know the structure, right? Now, do they have to do that? No, they don't have to do that. But you can anticipate that. And if you see the A and the B and the C, you're going to start looking for a channel crash and a turn right there. All right. So there we go. And then you leave your entry order in. Don't put it in now. But this one's in down in here, and this one's here right now. All right. So you put those two in. All right. Now, the whole key to this trade is trade number 1. All right. When you put trade 1 in, you put the limit on trade 1 right here, and you don't touch it. All right. When you finally get break even, all right, wherever you take it, once you get the break even, that's the whole key. You go to break even and you stay there. When would I try to take a little bit of profit? Not until down here. I would not move my stop till here. And when it hit here, I'd still be only here. See? All right. Why? Because you've got to give it room to do these ABCs and that kind of stuff. And you got to hold trade 1 until the bottom. So you don't want anything to come back and wick you in. Now, the good news is if you get it to break even, in order for them to finish the move that you've planned, they have to put in a lower high in this case because we're going down. Because they got to put in lower highs, your stop at break even should hold. Your stop at plus 10 might not. See, that's the problem. And now you blew your whole trade because you wanted to make 10 pips on a 130-year lots. If you just think about that for a second, you're going, Why would I ever do that? Well, because I'm a retail trader and I'm trying to make money. See, and what does that mean? I'm on my right brain because I'm not using logic. I'm not using common sense, logic, right? And I haven't spent enough time in the charts to understand how structure evolves. As you can see, I just drew structure that's not here. Does everybody see that? I've drawn structure that is not here. How can I do that? I can do that because I've done 200,000 charts. See, that's how I can do that. All right. So I can anticipate the market and then let it prove, hey, you're right, Scott. Or it goes up there and says, you're wrong. Yeah, practice, practice, practice. All right. So I have structure on here that doesn't exist yet, but that means I can create a plan based on this structure. And if it proves itself, then I have a winning trade underway. Now, because it's a real estate of the week trade, it's 326 pips to the downside. All right. If you get 326 pips from where we're here, but if you get up here, you're going to have 400 pips to the downside. You're going to have 300 pips here. You're going to have 200 pips here, and you're going to have 100 pips here. And you add those all up, you got over 1,000 pips. Oh, wow. What if that's the only trade that materializes for me this week? You got 1,000 pips. Oh, what's the key to that? You go break even on trade one and you don't touch it. You leave it alone. You do make all your money on trade 2, 3, 4, 5, whatever happens to be, how many you can get on. That's where you make your money. And when you finally get to the end, most of the risk has been taken out of the currencies because you held trade one, and then you take your profit on trade one. Pretty easy. All right, we'll see if that happens. All right, so real estate of the week trade is pound New Zealand this week. And it's iffy yet because it's still pretty early, but it's early enough. I mean, it's plenty of time to plan it. And if it materializes the way you planned, that's great. What if it changes that? Well, then you adjust. All right. Hey, it's not doing what I thought it was going to do. Good. Now what are you going to do? Adjust. Adjust. All right. So let me put this on here just for later on so we can take a look at it here. So this is a 1. Come on. A 1, 2, a 3, a 4, and a 5. We'll see what happens. We'll see if they follow that trajectory or not. I don't know if it's going to do it. You have to start. All right, you have to start, and when you're absolutely confident you got it right, that's when you trade. Until you're confident, you don't trade. All right. And traders don't do that all the time. 4 didn't paste. Yeah, dude, it's over here, right there. Right there is a 4 and there's a 5. See, once it gets away from these T30s, right? That's the future, but there's nothing there yet. All right. Any questions on that? Everybody good? Everybody good? Because I'm going to close the recording out, and I don't want to close it out unless you got because if you have a question. Everybody good? Okay.